Hey you guys, good morning. Hey, I'm going to share my screen, maybe. Let's see if we can get this going. Watch Zoom. Oh, wait, no. Okay. Hey, good morning. New agents, whoever needs this. I wanted to just kind of provide a quick money tutorial. And what that means is basically, I want to talk to you guys about the money involved in a transaction and where it comes from. From the beginning to the very end, we're talking someone's money. It's their investment. And it's so important to divulge to them in the very beginning what money is going to be part of this process, whether we're talking buyers or sellers. It's not just for their benefit, but it's for our benefit as well. It's that accountability. Hayden came up with the slogan, expect the experience. And I'm certainly trying to provide that for all of my buyers and sellers, but ultimately, whatever we do with them, it's going to come down to their referrals later. And if we provide them with a really great experience, and we're disclosing and educating, they're more likely going to refer us to other people. And that's the cycle that we want. That's where we want to go. We want each person that we ever work with to, build our business with the people that they're going to refer us to. And so I kind of want to talk to you guys a little bit about some of the things that I do that you do not have to do, but I want to share this with you because this has been a game changer for me and my response from and my feedback from my buyers and my sellers since I've been doing this has been phenomenal. And in fact, one particular guy was bragging to a friend of his about what I'm fixing to show you. And it's about systemizing everything. It's about disclosing, providing experiences for our buyers and sellers, but ultimately it's accountability for us, and it covers our butts. The Oklahoma Real Estate Commission, they do their very best to provide us with all the documents and details that we need to cover our butts, but sometimes we got to go that little extra mile to ensure that we're all on the same page. And so I kind of want to just start with how I start a transaction. Like when I first meet with someone, whether it's a buyer or a seller, I just literally go through the process. This is very boring. It's not exciting, but I give this to them. This is actually the agent version, and I'm going to utilize this so I can kind of help you to understand what a lot of the process of a transaction is. Most importantly, the money involved that we're going to talk about today. But whether I'm working with a buyer or a seller, I provide them with this. And from here on out, I'm going to have them start signing it too for my own records. You don't have to turn this in, but this is definitely something that I want to keep on record. Here's one for the sellers. And so we're going to talk briefly about these. If you want these, if you don't already have them, request them. But so let's just talk about buyers, because we're going to talk about buyers' money today. So with that being said, the money that we're talking about the very first time we visit is ultimately the money that they're going to be spending at closing or before closing, actually before closing and after closing. And so we've got to help them to understand what's involved. And I'm going to tell you something, a lot of times, especially our first-time home buyers, they have no idea that there are upfront costs. Even though it's in the contract, they do not realize that earnest money is deposited into an escrow account at a title company. They do not understand that a general inspection might be upwards of $500+. They might not realize that if they're buying a home with a septic system, that system hasn't been checked, serviced, or anything in years. That's something that they need to know about, and that's money. Appraisals. Most of our lenders are requiring those appraisals to be paid up front. And and actually recently, I mean, I've seen appraisals up to like $700 and something. So we definitely need to disclose the money involved when we first talk to a buyer. Hey, do you understand that number one, you've got to be pre-approved, but there are other pieces of this. There are other pieces to the pie. You've got upfront costs such as this. You've got a down payment possibly. You're going to have closing costs. And then you also need to talk to them about, do you know what your monthly payments are going to be? A lot of time our first time home buyers, they might work with a lender out of state, a very commercialized, something that they saw online. They clicked a button, they sent in an application, they got a generated email back, and all it says is you've been pre-qualified for $200,000. Well, they might not realize that their $200,000 payments are going to be, you know, $1,500, $1,600, $1,700 a month. So with that being said, we need to make sure that we are disclosing to them the money involved in their transactions. So like I said, you know, let them understand, help them to understand their upfront costs. Help them to understand that at closing, if they're getting an FHA loan, are they prepared to bring 3.5% of the purchase price to closing? Unless they're getting some type of FHA down payment assistance program. But again, we have to tell them this is between the buyer and the lender, and it depends on the type of loan. Make sure they are communicating that. Okay, make sure that they understand the amount of money that they're going to have to bring for a down payment at closing. Number two, obviously by law, we have to provide them this information, but they help them to understand at closing as well, especially right now in this market, you're going to be bringing closing costs, prepaids, your prepaid insurances, your prepaid taxes, fixed costs, bank fees, title fees. Those two things are going to have to be brought to closing. Okay. And so it's very important they understand that they're going to have to they've got to have money in the bank for this. They're going to have money in the bank for this. And there are two ways to get this information to them. Number one, I do this no matter what. I provide them a buyer cost sheet through using CTO Agent One app. It's an app, okay? It's the easiest way to do it. It's great. CTO is a Chicago title out of Oklahoma. I use their app. Man, I'll show you here in a minute how close we always are. The second way to get this information, or excuse me, this information right here is from their lender. Again, going back to systems, expectations, these things are huge for our buyers and sellers because, again, we're wanting to create that experience, and that experience is going to lead, and systems are going to lead to later referrals. Okay, so with that being said, number two, the second way is I ask this from the lender. So first way, I provide them CTO agent with this information, but then I also request it from the lender. Now, a lot of times our lenders are not working on the weekend, and so we cannot get a fee sheet from them. So we use this. So part of my system is, hey buyer, I need your pre-approval. Okay, great. Okay, they send me the pre-approval. On that pre-approval, typically, I'll show you one right here. Typically, there is an email address down here, right? A phone number and email address on this pre-approval. My next step, after I get this, we look at this. Look, you've been pre-approved for $315. Your loan amount's going to be $305. I think this is a conventional, but this is what the pre-approval looks like. But nowhere on here does it show what their monthly payments are going to be, and nowhere on here does it tell us what their closing costs could potentially be. So I take this email address and I send the lender and my buyer an email with all of us in an email thread, and I introduce myself and I say, hi, my name is Sarah. I am so-and-so's realtor. Hey, I just want to introduce myself. Looking forward to working with you. Can I get a fee sheet or a cost sheet from you? So then hopefully they reply to all, and this is something that I'm going to get from the lender, and I'm going to have them, and that's exactly what I did here. This is that fee sheet. The state of Oklahoma allows us to use this. Remember, we are required in the state of Oklahoma to provide them with money involved in a transaction. But a lot of us as brand new agents, we don't know what this stuff means. It's over our head. We don't know what this stuff is. And so we really don't know how to explain it. And so what this is the fees, estimated fees that are going to go along with the transaction. The actual fees, remember in the beginning, it's an estimate. We're providing them an estimate. I requested this from the lender. So that way I still can have this conversation. Hey, look, you guys, okay, this is your estimated monthly payment, okay? At closing, with your down payment and closing costs, you're going to be required to bring $15,000. Are you ready for that? Okay, same thing. Again, if the lender's not available, I still have to give them something by law. I've got to provide them with some kind of something. So we use CTO agent. This is an example of what is provided. On here, again, I'm not a lender, but right here, I'm doing the best that I can. I'm going to at least let them know, hey, it's probably going to be a little less than this, but be prepared to spend about $1,800 a month. Okay. And again, I always say, talk to your lender. But on the weekend, they need to know. Same thing here, bring to closing. So I'm at 15,000, lender's at 15.9. We're both pretty darn close. Okay. So I do both. That's my preference. But the reason I do that is because I want to make sure that their lender and I are on the same page. They know what their lender has communicated with them. I have them sign this. I really like them to have this because I kind of, if one of these fees is higher, I want them to see the highest one too, just in case, because we don't know what their insurance is going to be yet. Yes, we do need to be finding out what their insurance is going to be. They do need to make contact and communicate with their insurance right now. Absolutely. But we don't always have that. We don't always. So that makes a difference. So we're just estimating. Okay. So I just want to show that to you. These are the fee sheets. Now, where does this money come into play? Where does this money come into play? It's the same thing. Okay. It's just broken down a little simpler. Okay. It's going to be here. At closing, your buyers and sellers will get this. Okay. This is a settlement statement. So before we start the process, we break it down for them. Next step, after we get the pre-approval, we request the fee sheet or cost sheet from the lender. We have them sign that because really technically this is all we need. If we do get this, they can sign this, okay? But I like to do my own because I like to see which one of these is going to turn out the highest and prepare them for the highest, worst case scenario type thing. You don't have to, but I like to. You only have to have one. I like both. Covering my butt. Y'all, you're going to learn when you're dealing with the law, you're dealing with contracts, you're going to cover your butt. Okay. So with that being said, all of these fees, beginning, and now all of this stuff prepared them for what they see here. Okay. Now these aren't going to match up because they're two different contracts because I have not closed on this one. So, but ultimately, this is where it ends right here. Okay. I made some notes. We're going to talk about some of this stuff here in a little bit, but what you explain to them, prepaids, insurance and taxes, fixed costs, what we talked about over here, title services. Little verbiage is a little bit different on these. Prepaids, fixed costs, homeowners insurance. Okay, we're going to go back here and it's all in here. Here's your prepaids. Okay, here's your prepaid interest. Here's your taxes. Okay, makes sense? Same thing with your sellers. I explain this here. Here's your sellers. Sellers breakdown, upfront costs. Same thing. I go through the same thing. I always disclose to them. Now, they're not going to have anything from a lender, but I'm going to use these fee sheets and I'm going to use my CTO agent to give them the best estimate that they're going to net. But I explain to them what closing company fees are. What is your, when you're looking at this and you see right here, UCC search, documentary fees, closing fees, processing fees. Okay, all of these in the yellow are for the seller. These over here are for the buyers. Title fees, all of these things that they see at the end is what we have explained to them. UCC, gap search, doc stamps, commission. Let's go back over here and let's look at this. Here's your commission, listing commission, selling commission. That's what we estimated here. That's what we show them here. So basically, this is just a super organized, less scary way of looking at what a seller is paying for. And okay, and it's ultimately what you're going to see at the end. So far makes sense. So when I first meet with someone, I disclose these things up front. Okay, if I'm working with a buyer, I get their pre-approval. The first thing I do is I start an email thread with the lender, the buyer, myself. I request a fee sheet and I introduce myself. Okay, great. Everybody's happy. Communication's great. Okay, that's a system. That's a standard. That's something that I do consistently. Okay, and they love it. It's so simple, but they love it. Okay, my buyers love that they know what's fixing to happen. Recently, I had someone, again, a first-time home buyer. Y'all know that's my favorite. They had no idea that there was all of this involved. You know, even at a $100,000 house and you're looking at $1,000 earnest money, they didn't have that plus a couple hundred dollars for, you know, the inspections, or a couple $1,000s more for the inspections and the appraisals and stuff. And they said, okay, we want to buy a house. We need about 3 months to save up this money for this. Okay. Or they might say, oh, okay, they don't qualify for first-time home buyers assistant. So, or they're getting a VA. No, VA doesn't. A VA, you don't have a down payment. You can put down money, but you don't have to. If it's conventional, they only qualify for a conventional loan and they really don't have a lot of cash. You know, talk to them about that, because if it's a conventional loan, they might be putting any amount down. You need to know that. And where are we going to get that information? From the lender in that communication. We need to make sure that they know what their down payment is. They know what their monthly payments are, what their upfront costs are, and their potential closing costs. Because right now, sellers aren't paying too much of that. We're going to talk about more about that in a minute. I know I'm repeating myself, but these are very important things. Okay. Again, back over here, when I first meet with a seller, hey seller, nice to meet you. Hey, okay, I've just done your market analysis. We've talked about these things. This is what I've done. Here's your price. Your home is worth $235,000. Okay, now what? All right, you need to understand that if you owe $230,000 and you just bought this house, these are the fees that you're going to be paying. Okay. So your net, you're going to be bringing money to the table, and they're going to say, hold on. And this literally just happened to me. I just sold a guy to a house. I sold a house to a guy just a year and a half ago. He's moving, and he thought he was going to be here forever. This was going to be his forever home. And he brought a lot of money, and he put a lot of money down, and the market, fortunately for a lot of people, has really changed significantly and been in the green for a lot of people. But unfortunately, in his position, he's not. And so after I ran the market analysis, after I showed him what I did and how I did it, okay, I did the net sheet, and he was going to have to bring money. He said, I'm not doing it. I said, I don't blame you. So he's going to put his house up for rent, and he's going to make some money off of it. It's going to be an investment property. But are military buyers prepared for that? You know, they're only going to be here 3 years. Are they in the position? Is this going to hurt them? And so anyway, they might have to rent it too. So it's so important that we explain to them these costs involved that are ultimately going to be right here at closing on this HUD/settlement statement. You're going to use that. You're going to hear that verbiage used intertwined as well. HUD statement, settlement statement, same thing. Okay. All right. So with that being said, another thing that I do, I'll go ahead and, well, I don't want to jump over that. No, we're going to stick to money. All right. So I just kind of wanted you to see what these fees were. This money is in pounds, means escrowed. Okay. A lot of people don't realize that. That's the escrowed. Basically, this is money paid up front, depending on the lender, how much the lender wants. So this lender wanted 3 months worth of homeowners insurance, and they wanted 10 months of taxes paid in advance, so that they know that they're going to always, the house is always going to be insured and the taxes are always going to be paid. So they want this up front in an escrow account. If you have if you are getting, your buyers are getting a mortgage, if they're getting a loan, then the lenders make the payments to insurance and to their taxes. They pay their taxes. Okay, so they take care of those two things. So you write one check to your lender, or it's the buyer pays the lender their, say, $1,700, right? Their monthly payment, $1,717. Okay. The buyer pays this to the lender every month for their house payment. The lender takes out taxes and insurance and pays the taxes and pays the insurance for you. That way you're not having every month to pay 3 different payments. So that's where that escrow comes from. Okay. It's money paid up front so that they can pay that for you. Okay, escrow. This aggregated adjustment just means basically from the time that they gave you this estimate, okay, of what the taxes might be, to the day of closing, what they actually are. This is the difference, and it's usually credited. Because again, we like to estimate high, and so you know that's the difference between those two. So that's credited to the buyers. All right. With that being said, just take this apart. It's pretty self-explanatory, but let's talk about what can be paid by the seller. So let's say this guy here was going to have to bring $11,000 to closing. That's a lot. Okay. That's including his title insurance, abstract after closing. So it's just another fee, mortgage stamps, certification fees, the deed, property taxes, prepaid insurance, prepaid interest, appraisal fees, underwriting fees, all of these fees. He also has his VA funding fee that he chose to pay up front. All right. So all of that adds up to $11,000. Now, this guy was probably prepared for that from his lender and from his agent. Remember, this guy's, the buyer, was provided a fee sheet from his lender and a fee sheet from his, or closing cost sheet from his agent. So he was prepared for this. So when he said, I don't have all that. I don't have all that. Tell you what, I will offer them full price plus a little if it appraises for them to pay half of that. I need half of this. I've got half of this. I need half of it. Okay. He got a VA loan, so there was no down payment involved. So all of this is his VA funding fee and all of his fees, his prepaids and fixed fees. Okay. He said, I need help. I need help with this. So in the contract, he asked for $5,500. That's it. However, we learned in our last video that VA buyers are allowed to ask sellers to pay up to 4% of the purchase price. So technically, the purchase price was $215. Get your calculator out. What is 4% of $215? Now I've already done this, but I'm going to do it one more time because I'm going to do it with you. 215. Same thing I got last time. Technically, he could ask for $8,600, but he didn't, because right now you can't do that. But he did. Out of that $11,000, he needed some help. So, and we knew, again, I'm just going to keep going back. How do we know it's going to be $11,000? Around $11,000, because we were prepared for that, because we got the fee sheet or the cost sheet from CTO Agent 1 app or the lender. Okay, so $11,000. He needs half of this, so he asked for half. So in the contract, okay, on the loan supplement, VA guaranteed loan. This is the loan supplement that goes with the contract. And it says right here, the financial supplement is made an integral part of the contract. Okay. So this VA loan supplement is part of the contract. And this is where we ask for it. Right down here, additional provisions. Right here, it says seller to pay buyer's closing costs in the amount up to, not to exceed $5,500, to include, but not limited to, allowables, non-allowables. Remember, if you go back to one of my videos, it tells us what allowables and non-allowables are. We'll talk about that again later. Title insurance, initial interests, points, inspections. The reason I put inspections on here is because termite inspections used to be not allowables, but I think they are allowables now, still covered, but there might be other inspections I want them to pay for. You know, if it's included in that $5,500, they might pay for a, I don't know, a septic system inspection or some other type that is paid at closing. So I throw that in there. A lot of people don't. I do, just in case. Origination fees, if any. So this pretty well covers everything. So this is where we ask for that $5,500. Okay, half of that closing. Again, what could he have asked for? $8,600. He could have, but we ain't doing that right now. It's not working out. And so he's asking for half. And I also put that right here, and I will share that with you guys. So here is a bigger, all I do is copy and paste this. Sellers to pay buyer closing cost and then the amount up to and not to exceed. And then you can just go in and change, you know, whatever it is you want it to be, whatever, doesn't matter. To include, but not limited to. Now, let's go back. It's here, guys. actually. If you look at this contract, if you read your contract, all of this stuff is in your contract, actually. We add a little bit just to cover, and that's why we do it at the bottom. It covers a little bit more. So it's spelled out and clear, but it's right here. Buyer shall pay initial loan fees, including property appraisal and credit report fees. And if you scroll down here, buyer shall pay at the time of closing, prepaids, insurance, flood insurance, if it's in a flood zone. It says right here, prepaid taxes, insurance escrow, closing, prepaid interest through the month, VA allowables, not allowed, origination fee, right here. This is where we're asking for it as well. So this is where it's disclosing that this is the buyer's required closing costs. But part B is where it's saying, hey, seller agrees to pay a portion of this. Seller agrees to pay at the time of closing on behalf of the buyer via closing costs, discount points not to exceed. We could have put they could have put $5,500 in here, which includes prepaids. Here we go again. We've seen this how many times? Prepaids, escrow. What does escrow mean? Your prepaid insurance and taxes, your origination fees, and your allowables. So we keep seeing it over and over and over. It's in the contract, okay? And then all we're doing is we're just specifying down here specifically, but not limited to. So it could include anything. All right, with that being said, so I know I say that a lot. We've explained all of this here. We've explained all of this here to our sellers. Seller side, buyer side, all of these things are broken down at the very end. Okay, we've explained it here. We've explained it to our sellers. We've gotten fee sheets for our buyers. We asked for it right here. Okay, so where we asked for it. Now, if you look at this, we only paid out $5,222. Well, if you add up all these little pink highlights, add up to, well, let me explain it better. If we added up everything, it came out to 11,000. But we took out the VA funding fee. This is a credit. We took this out, which is a credit. We took this out, which is a credit. We talked about what that was a while ago. So these two things were credited to them, to the buyers. So that means it's not included. So once I took that out, it came to 11,000 minus the VA funding fee, minus those taxes, minus that aggregated adjustments. It came to what we ended up paying for seller closing costs. So really the only thing that he ended up having to pay was his VA funding fee. Okay. Questions? I want you to see how all of these things are attached, how they're all a piece of the whole process. So let's go back here real fast before I finish up. Okay. We disclose the money here for our buyers. We disclose the same thing in a different way here. All of these things are signed by all parties, okay? Both buyers, excuse me. There's two buyers, husband and wife, whatever, two buyers, two signatures, okay? So everybody's on the same page. Here, 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 okay? Then we write the contract. We ask for it here. Then That's this part, step 3. This is the actual making the offer. Then after the offer is accepted, we go through that process. Once and at closing, they receive this before closing. We look at this before closing. Agents, take the time to add this up. Take the time to make sure all of this is correct. Clerical errors happen all the time. It's no big deal. I can't tell you how many times I have to send these things back because they're not right. And that's okay. We get last minute things in, you know, and some people just don't catch that, or they thought they put it in and they didn't. It's no big deal. But always make sure that these numbers are correct. Check your commission. Okay. Confirm the payoff. I had a guy the other day did not disclose to me that he had a second mortgage. Okay. So we were $10,000 short of what I had estimated. And at first I freaked out. I was like, oh my gosh, what did I do? What did I do wrong? What did I do wrong? Oh my gosh, my net sheet to him, my CTO agent net sheet to him was $10,000 off, and I died. I said, I've never been off. And I started sweating and I thought, this guy's going to make 10,000. I mean, that's a lot. $1,000 is a lot to me. 10,000, well, hell. Excuse my language. I went through and there was a second mortgage. So I called him. I was like, hey, there's a second mortgage on here. And he said, yeah, it's supposed to be there. Okay. So I panicked for nothing. They're not always going to disclose everything to you. I had a deal one time to where a guy didn't pay his taxes for like 2 years. And we found that out before closing. It's no big deal. He's got to go down there and pay it. You got to pay it before you close. So don't freak out on anything that's on here. The second thing too, what was another situation? Oh, something was popped in my head a while ago. Anyway, their abundance of things could be different here. So no worries. Just make sure all the numbers add up, make sure everything's on there. Maybe there is like an allowance to a contractor or an electrician or something, and that needs to be on the settlement statement. Maybe there's an escrow holdback that's supposed to be there. Well, I missed one of those recently, and so just take your time, do your due diligence, and go through this and make sure everything's on there that is within the contract, because all of this is laid out in the contract for you guys. I think that's just about it. I think I've showed you everything. If you want any of this stuff, let me know if you don't already have it. But I just want to talk to you guys about money and what this stuff means. It's laid out on here, what these things are, especially right here. You can explain to your sellers exactly what this stuff is. You can explain to your buyers this escrowed, and guess what? Google it too. If you forget how to explain it to somebody, just Google it. Say, here, this is what it is. Okay, impounds means escrows. If you don't know what that means after I told you, Google it. All right, guys, peace out. Enjoy your day. Hope this is helpful. If not, ask questions. I'll talk to you soon. Bye.